President Trump rolled out his 25% tariff on foreign steel 8 months ago, I was exuberant. We figured the steel stocks would catch fire now that the industry was protected from the flood of cheap, government-subsidized Chinese competition. So I told you to buy Nucor, which is by far the best steel maker in America and the world for that matter. There was just one problem. While the tariff has been terrific for the price of steel, it hasn't done anything for the steel stocks. In fact, Nucor, the strongest performer in the group, is still down roughly 8% since the announcement. And that's after the stock has rallied more than $7 since its recent lows. As I told you a couple of weeks ago, I think the problem here really isn't Nucor, it's rising interest rates. As long as the Fed wants to keep tightening aggressively, it may be too risky to own any of the steel stocks, but if, of course, you wanted to take that risk, Nucor's the best of the lot. On top of that, I think the tariffs make the Fed more inclined to tighten because they see the resulting higher prices and it makes them want to stamp out inflation. Not everyone agreed with my conclusions, including Nucor's management team. While I am worried about a Fed-mandated slowdown, lowering the boom on the steel industry, they're much more optimistic about the impact of the tariffs and the future of Nucor. And I think it's important to hear the other side of the story. So let's check in with John Ferriola. He's the chairman and CEO of Nucor. Find out where he thinks the business is headed. Mr. Ferriola, welcome back to Mad Money.
Well, thank you, Jim, for having me.
All right, John, I want you to, you got the floor. Because, I think that Nucor is the best steel company, but, I am concerned what the Fed might do and worldwide synchronized slowdown and what that could do to the steel stocks. So tell me why maybe I should be more upbeat about the group and Nucor.
Well, I think, Jim, you have to look at the overall economy. And we hear a lot of talk about the tariffs, and certainly the tariffs are playing a role in the performance that the steel industry, and Nucor in particular, is having this year. But the real driver for the performance of the industry and Nucor is the economy. And the economy remains strong. It's being driven by the tax reform, by deregulation, by a very strong energy market. And all of these things are factoring into the fact that demand is good, the economy drives demand in steel. When you look at our demand in the industry this year, excuse me, it's up about 2% year over year. So we're seeing a very good year in the industry. And Nucor, frankly, is having a great year. We're on pace, Jim, to have our best year since in history, best record year. And we're looking forward to that. We just finished an outstanding third quarter. We had a very good third quarter. We generated a lot of cash. We generated a little bit over $1 billion in cash from operations. And that's, just to put that in perspective, that number in perspective, that's almost the same amount that we generated in full year of 2017, and 2017 also was a very good year for us. So things are looking good. I'm more optimistic and more upbeat than you on the future of the future of our industry, particularly as we go forward. Okay. We continue to see we look at 23 or 24 end markets, and of those 24 end markets, 23 of them are either stable or increasing as we go into the fourth quarter and the first half of next year. So we're still optimistic about the future.
Okay, so John, October 15th, Credit Suisse put out a piece that deeply influenced my thinking, which was caveat emptor, downgrade the U.S. steel sector weighting on cautious supply and demand, and then, of course, the Fed saying that they might be willing to overshoot to stop inflation. Those were two things, this report and also the Fed's comments, that made me a lot more cautious. You seem to not as be concerned about supply and demand or the Fed.
Well, when I look at the demand, as I said, continues to be strong. It's up 2% relative to last year. And the fact that the tariffs have stopped the flood of illegally traded imported steel into the United States, that's going to be a positive also. If you look at this year, steel imports are down about 3.5 million tons. Frankly, about 3.1 of those million tons have occurred since January 1st when the tariffs went into effect. So we see imports down, steel demand up, and that bodes well for the industry.
Should we be concerned, let's say, if you're a shareholder of Nucor, let's say the Democrats take both the Senate and the House. They've historically not necessarily favored tariffs. They do in some cases. Would you be concerned at Nucor if that occurs?
Well, not really, because as I mentioned earlier, the tariffs are a factor, but they're not the driver. The driver is the economy. And as long as the economy stays strong, and I think it will, as a result of tax reform, energy, deregulation, as long as it stays strong, demand is going to stay strong. And at the end of the day, Jim, the economy drives steel demand, Steel demand drives steel pricing, and we see the economy remaining strong. So unless there's a major change in tax policy, a major change in deregulation, and we see a sudden and unexpected drop in oil, I think it's going to remain strong.
Okay, any issues involving seasonality that I should be concerned about the steel industry in general?
Well, always the fourth quarter, and we've said this publicly, that our fourth quarter will not be as strong as our third quarter due to, historic and normal seasonal factors such as weather and the holidays. So we say that our fourth quarter at Nucor will not be as strong as our third quarter in 2008. But that said, our fourth quarter of 2018 will be notably stronger than our fourth quarter of 2017.
One last question. Your policy has always been to reward shareholders with a strong dividend, sometimes even special dividends. Could a special dividend be in the making, given the fact that Nucor is having such a good year?
Well, we'll keep you guessing about that, but I will make a comment about the cash that we generated from operations. I mentioned that we had a great cash generation in the third quarter. But when you look at the first 9 months of 2018, we generated about $1.9 billion in cash from operations. And of that $1.9 billion, we returned about 40%, or just about $700 million to our shareholders in a combination of dividends and share repurchases. So we are returning to our shareholders.
Well, excellent, John. You're a stand-up guy. I want to thank you so much for coming on. You've always done a great job, and Nucor has been by far the best steel company in the world. That's John Ferriola, Chairman, President, CEO of Nucor and UE. Mad Money back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.